Mom and pop landlords are giving up. They've stopped buying houses, they've stopped renting their properties, and they're getting completely out of the rental business. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting topic for you today, and it's going over the fact that mom and pop landlords throughout the entire country are giving up, okay? We are getting hit hard economically, and the government isn't making anything easier, okay? So interest rates are going up, obviously. That's something that's happening to everyone. And not only are homeowners slowing down their purchasing, but mom and pop landlords are as well. The rise in interest rates really has hurt the rental property market. And people don't realize that, hey, there already weren't enough rental properties out there for people. But when you're telling the landlords, hey, when the landlords are saying, hey, I don't want to buy real estate anymore, or I just want to get out of this business, and there's going to be less and less, especially when we're talking about single family houses, okay? And that's the domain of small mom and pop landlords such as myself, okay? I personally own 5 single family rentals, so I can tell you that a lot of the smaller landlords, that is the type of properties that we buy, okay? So yeah, it's going to become it's going to be bad, okay? It's just going to be a bad situation for the next few years. I know that there's been a few fluctuations up and down of interest rates within the last few weeks, but overall, I believe the interest rates are going to remain much, much higher than they were in late 2021 and early 2022. So yeah, we're looking at a completely different market, and this is going to really, we're going to see who the people who survive really are, okay? So before I get into the article, go ahead, hit the like, subscribe button, and leave a comment down below. Let me know what you think, okay? Do you believe that the rising interest rates and the, more regulations, the higher taxes, all of the inflation and everything, do you think that more mom and pop landlords, the small landlords, are just going to give up hope and get out of the business? Or do you believe that more investors will start to move into real estate? I've heard that theory as well. More people are going to start moving into real estate because the stock markets are so wild and crazy. They want something more stable. I honestly don't think that's the case. Real estate has always been kind of an afterthought when it comes to investors, just because of the difficulty it is to buy and sell properties. So you really have to want to do it. It's not like you can click a button on your app and sell your shares of the real estate like that. No, it's a long, drawn out process to buy and sell real estate. So anyway, let's get into the article. This article is coming from Realtor.com, and it says, mom and pop real estate investors are pulling way back. Here's where and why it matters. And yeah, the article actually goes over the places where, small mom and pop landlords and real estate investors are pulling back the most. And I'll go over all of that. So let's get into it. For the past several years, venture capital-backed investment behemoths and mom and pop newbies alike have poured money into real estate. With mortgage interest rates at historically low levels and stimulus cash sloshing through the economy, real estate investment went from vigorous to full-on feverish. And along the way, investors, many of whom came to the party with all-cash offers, fully changed the face of many markets, sometimes locking out first-time home buyers. However, many of those investors, especially smaller ones, have recently slammed the brakes on their purchases as the housing market has shifted. The market conditions that made the foray into real estate investment such a sexy proposition have in large part begun to dry up as mortgage rates have soared and the large hikes in rental prices are beginning to slow. And yeah, that stuff is all 100% true, right? Mortgage rates have soared, rental price growth has, just started to stagnate. But I think that overall, long term, real estate is still a very good thing to be in, but we have to look out long term. And a lot of the problem is the people who were hopping into real estate, they were looking for more short term gains. They were seeing the huge amount of appreciation that properties were getting in 1 or maybe 2 years. And they were like, hell yeah, let's jump in. Let's get in now, right? Well, real estate is a long-term game, and you can ask any landlord, any real estate investor that, and be like, hey, you need to look to hold the property for at least 5 years in order to get decent appreciation, at least. Okay, some people, they hold properties for 10, 20, 30 years plus before they really are making good money, and they're getting that appreciation, that big wealth build up. And I don't blame them, because I don't like to sell properties myself. I hold on to properties as long as possible. And when I do finally sell my properties, I use the 1031 exchange just to buy more properties and not pay any taxes. In some parts of the country where investors competed directly with first-time and other buyers, often winning the bidding wars, investors have been beating a hasty retreat. So Realtor.com dug into the data to figure out where investor home purchases have fallen the most. Buyers might have a stronger shot at purchasing homes where they hope to live in these markets if they're not competing with as many cash flush competitors. Note, we looked only at sales of investment properties that were purchased using mortgages, which, according to Darren Blomquist, is where you'll find more of the beginner investors. These homes are generally flipped or rented out. The thing is, right, and I realize that, they did the best they could with the data available, right? So they looked at homes that had mortgages on them, and they assumed that, small mom and pop investors, they use a mortgage. But from what I've seen, pretty much, all of the big players, they don't, they might not have an individual mortgage on a property, but everyone is using loans to purchase this real estate. Even the people who are making cash purchases, they are really, they're using lines of credit, and they're not buying these homes with just straight cash. Okay, it might look like a cash purchase, but you might be using a line of credit, or you might have done a refinance on a different property to draw out equity and then buy that other property with cash. But it's this might not be the best indicator that these are small mom and pop investor purchases. That's what I'm trying to say. And the other thing is, a lot of small mom and pop investors also will, they use the same tools that the big investors use to purchase property. So yeah, it's not the best, but I realize that they're doing the best they can with the information that they have. Okay. So, I also realize that they are writing this article from the perspective of a home buyer and not from the perspective of a landlord and what we're going through. Okay. They're trying to say, hey, you homeowners who've been competing with, the landlords for properties might actually have a better chance of purchasing one now because the demand is so low. But, the problem is that the prices are still up there. Okay. They haven't declined in value enough where it makes up for the fact that interest rates are so much higher. And so I think that for now, a lot of buyers are just going to be still priced out of the market. And that's both landlords and for just regular homeowners. So let's skip down a little bit in this article, because I want to go over the cities they say where landlords and real estate investors have backed out the most. Okay. And we'll start with number one being Seattle, Washington. Investors have backed off their real estate purchases in the Emerald City as their purchases just aren't penciling out the way they did earlier. Roughly 1 in 30 mortgages in the metro area is now for investment properties, compared to 1 in 20 about a year ago. In markets like Seattle, which have gotten so expensive where buyers are paying $800,000 to $900,000, the rent required to cover that is going to be $6,000 or $7,000 per month, says Gardner of Windermere Real Estate. For a potential landlord, the prospect of finding a renter who can pay that kind of money every month is increasingly slim. Nonetheless, cash purchases in Seattle have held steady for about the past year at around 20% of all sales. So yeah, talking about Seattle, I just have to bring up the fact that, hey, we know that a lot of the tech companies are laying off. I heard about Amazon laying off. I heard about like Google laying off, Facebook, etc. And a lot of them, they have large operations up in the Seattle area. So obviously, if there's a lot of people who are unemployed, etc., there's going to be less demand for a lot of these homes. Okay, and like they were saying there, the rental income you can get for a $900,000 house is, in general, there's not going to be a lot of people who are looking for homes in that price range to rent. So yeah, I can see why landlords are not in particular looking for properties there to be rentals. So I'm going to hurry up and go through the rest of these real quick. Number 2, Cincinnati, Ohio. Number 3, Boise, Idaho. Number 4, Denver, Colorado. Number 5, Minneapolis, Minnesota. Number 6, Worcester, Massachusetts. Number 7, Oklahoma City, Oklahoma. Number 8, Pittsburgh, Pennsylvania. Number 9, Louisville, Kentucky. And number 10, Dallas, Texas. So out of that entire list, right, I think the cities that surprise me the most that landlords are backing off on are the places where housing is the least expensive. So in particular, I'm talking about Louisville, Kentucky, Oklahoma City, Oklahoma, and I believe, Pittsburgh, Pennsylvania, right? Those are places where in general, it's known that the housing in these places is less expensive than it is in places like Seattle and Denver and, up in the Boston area. Also, I guess Cincinnati, Ohio is on that list as well, right? So, it's kind of telling when you see, hey, there's both, the more popular and expensive cities that are suffering this decline, as well as the less expensive cities that are also suffering the same decline. So it just tells you that the entire country's economy and real estate market right now is in, just this state of flux, and you don't know what's going to happen. So yeah, interesting article. And, I got to say that I'm not surprised that a lot of landlords right now, they're just backing off. They're just waiting to see what's going to happen.